because you have to charge it for good 4 years, because it is a 4 years, so it must appear in balance sheet for good 4 years. So 12,000. So let's depreciation for the second year. Depreciation for the second year, 2,000 plus 25, that is 4,500. So let's this, that is 0, 0, 0, and that is 8,000. That is 8,000. Then the third year, year 3, we have a machine. Then less depreciation. Now the depreciation for the third year is 6,100, because you add 25 plus 2,000 plus 16, it will give you 6,100. Then less it 4 and 6, so that is 6,400. Then the last year, which is the fourth year, machine. Machine is 12,500. While the depreciation for the first year is the fourth year is 7,038. So that would be 0, 2, 1, 5. You see that the scrap value at the end of the day is 5,120. So that is how you prepare balance sheet in the depreciation. So that is that in a straight line, diminishing by balance method. These are you prepare these 4 ledgers, and having prepared it, you get your mark at the end of the day. Sales of asset. You know, at times they might give you a question that has to do with a sale of asset. We will do the necessary things that we need to do here, so that when you come across the question, you will be able to tackle it. Now, sales of an asset, there is a situation whereby, you know, we talk about salvage or scrap value. It is an estimated, but in a question, you might be given that the asset is being sold, is being disposed at the end of the day. So when you are in the question, when you are given that asset is being disposed, that means they are talking about sales of an asset. So there is the necessary ledgers you have to prepare. We still need to prepare the necessary ledger we prepare in the other method. But here there are some additional ledgers that we need to prepare, so as to show whether the sales of an asset, whether there is profit or loss at the end of the day. So when we are talking about sales asset, it is when assets are sold during the trading period, and there will be either profit or loss. You know, at the end of the day, I will talk about when asset is depreciated for useful life, it will be disposed at the end of the day. But here, the question given here is that the asset must be disposed. So we might be given the question. So ledgers to prepare will be given when we get to the illustration. Now, the illustration that has to do with sales of an asset, anytime you come across this question, the cost of a motor car is 3,000 naira and is to be depreciated at 20% for 4 years on a straight line basis. Here, you don't need to use any formula again. You know, I told you the other time that when you are preparing trading profit and loss account, you will not have to prepare formulas for it. You will be given the percentage in the question. So here, we are not given the scrap value, but we are given the percentage which we charge the depreciation. We do that now, and they said you prepare a straight line method. Now, at the end of the day, the asset was disposed of for 1,000 naira after 4 years, after written off the depreciation for good 4 years. Then they said use straight line method to prepare the necessary account. Now, here we don't need to write any formula. What we do write is you write the cost, because you know in the straight line method, what we charge is we charge it on equal, and we have been given percentage to charge it. So you times it by the 20%. So which is this is 5 and this is 1,500. So this is 5 and this is 600. So 600 will be charged for good 4 years. So here 600 will be charged for good 4 years because it is 4 years, but you are given the station at which you be used to charge that cost. So the division for the 4 year is 600. So this 600 will be charged for good 4 years. Now, if you times 600 times 4 years, you will see that we have 2,400 at the end of the day. So this 600 will be charged each yearly for good 4 years. And they now said, now what we now do is that you write 300 minus 240. You know, the station that was charged is 240. So the remaining salvage, which is the scrap value of that asset, is 600 naira. That means the estimated value for that asset is 600 naira. Remember, percentage is given here. You charge it, 600 will be charged for good 4 years. And when you charge it for good 4 years, the total division that will be charged for 4 years is 2,400. Then the cost you less is from the division that was charged, you see that the scrap value for that asset is 600 naira. Now, here we go. This is where situation of a sales of asset setting. They said it was not disposed for 1,000 naira. What will happen here is that the value at the end of the day is 600 naira, and we are now being told here that that asset that cost 600 naira was disposed for good 1,000 naira. You will see that at the end of the day there is a profit in the disposal of that asset. So we prepare an adjustment for that. So this minus this is 400. So that's the profit. Is a profit on the side of the disposal of an asset, and that always happen when the company disposes an asset and the cost of that asset is far more beyond the scrap value of that asset. And that is the situation where we have that situation here where that asset cost, the salvage value, the scrap value is 600, and the disposal asset for good 1,000 naira, you discover that there is a profit in disposal of that asset. So we prepare the necessary ledgers that we need to prepare using the straight line method. It has no difference with that of the former one, but there are some ledgers which we need to prepare to show the profit which is 400 in the book of ledger at the end of the day. So let's prepare the account to solve the workings that have been done here. Now, the first thing we prepare is my asset account. We prepare the under the two methods that we discussed earlier on. We have a motor car account, and don't forget this is a disposal of that asset was being disposed, but the ones we did the other time, the asset is not disposed. But here in this question, they said the asset is disposed of. So this is how you prepare it. You prepare year one. How much is the cash of that asset? The cash of the asset is 3,000 naira, because it is that asset was disposed at it is 4 years, so it was disposed in the 5th year. So you write year 4 asset disposal, remain the same amount. And then when you dispose an asset, is a sales, so it has to be credited. So you see that those things also are subjected to double entry principles at the end of the day, because you don't just treat any items under any side. It has principles that guide their preparation, and that's why anything that has to do with disposal has to be on the credit side. Now, having prepared my motor car account, you prepare the provision for depreciation account. So year 1, we have a profit and loss. The division that was charged in the first year is is on a straight line basis. So 600 is charged. Then year 1, balance CD, that is a 600. Then year 2, we have, you brought it down, balance BD, which is a 600. Then depreciation, December 31st, profit and loss, the same amount, which is a 6,000. You know, it's on a 600 is on a straight line basis. 1, 2. So year 2, we have a balance CD, which is a 1, 2. Then year 3,